In cities like Phoenix and Austin, there have been reports of a nearly 40% decrease in vacation rental revenue. So has the vacation rental market collapsed? Is it too late to own a vacation rental in Sonoma County? There's no question that a lot of owners are seeing some falls in revenue, but it's far from a collapse. By the end of this video, you'll know exactly which route to take and whether you should sell your vacation rental or look to buy one. So let's talk about the current state of the vacation rental market. The best place to look to find out whether the vacation market is tanking is just to look at the revenue for Airbnb, the company itself. For the 12 months ending March the 31st, 2023, their revenue was $8.7 billion, a 32% increase year over year. The Airbnb annual revenue for 2022 was $8.4 billion, a 40.17% increase from 2021. So if Airbnb is a barometer of the health of the market, it tells you the market is still going strong. There's no question that short-term rental owners did well during the pandemic. Many travelers avoided hotels, to be honest, and other people, as much as possible. It oftentimes made more sense and felt far safer to rent a house while on vacation versus staying in a hotel. But the pandemic is over, and though people are willing to travel these days, the rise in living costs and the questions that loom over the economy at large, are we in recession? Are things actually getting better? Is inflation going to keep going up? Might make people more wary of spending large sums of money for non-essential vacations. I mean, this is just part of the economic cycle for non-essential spend. While you may see some headline figures about this market or that vacation rental market being down 40%, here's something to remember. There's not one single short-term rental market in the US. There's no such thing as a nationwide short-term rental market. It just doesn't exist. We need to look more closely at specific markets. If we look at Sonoma County market, for example, revenues they're definitely down a little bit from April 2021, but only by 11% in Sonoma, which is one of the hottest markets. In Guerneville, which is in the Russian River, the revenues are down 18% from the same period. So what is interesting though, is that the number of new active listings has only actually increased by 6% in Guerneville and only by 2% in Sonoma. I mean, part of the reason for this is the moratorium, although the year-on-year increase in the number of vacation rentals is never much higher than that. If you listen to the anti-vacation rental lobby, they make it sound as though every home ever sold is sold to someone wanting to set up a vacation rental. And that's just not true. It's clearly nonsense, because just 2% of housing stock in Sonoma County is currently operated as a vacation rental. So what are the challenges facing vacation rental owners today? Well, occupancy rates are the first one. So occupancy rates have softened a little bit in some markets like Occidental and Guerneville, but for the hot markets like Sonoma, the occupancy rates are definitely maintaining their levels. I mean, as with any business, it's important to have a cost structure that will ride out the slight decrease in income. I mean, you can't afford to build your business to only be profitable when the market's hot. That's just not how business operates. The next challenge for vacation rental buyers is interest rates. So interest rates are definitely a challenge, especially for new owners. When you could get financing at the 3% level, it makes a big difference to the bottom line when suddenly you're having to finance the property at interest rates of 6% and more. Hopefully these rates won't last forever, but I feel the new normal is probably likely to be nearer 5% than 2-3%. So we need to adapt. The next challenge is, how do you manage your operating costs? There's no getting away from the 12% transient occupancy tax or the 3% Airbnb fee, but there are other costs that you need to make sure you budget for. The big cost for a lot of people is the management fee, which is as much as 20% for a full managed service. However, there are definitely alternatives, especially where you are happy to take on managing the property online and communicating with guests. I mean, there are so many great tools out there that can help you optimize pricing, ensure there's regular and consistent communication with guests, both before, during, and after their stay, that you can definitely save considerable amounts of money by adopting a hybrid management approach. And there are other costs that can get out of hand. For example, if you have a pool, heating a pool in the shoulder seasons can get very expensive. So some hosts will charge more for that, while other factors will actually just cost it into the overall budget. but make sure you go through all of your operating costs with a fine-tooth comb. Another challenge for vacation rental owners is having to apply for the new business license that only came into play in June 2023. Even if you have a permit, you were not technically able to operate your property as a vacation rental if you did not have the new business license. However, for a while, the county didn't even have an application process in place. I mean, this has now been resolved, but it's taking 30 plus days to get issued with a license. But you can't apply for your license until you actually have the permit, which also takes 30 days. So that's 60 days lost income for new vacation rental owners. Again, it's not a problem so long as you know in advance or if you're planning to do some remodeling to the property. So where are the current opportunities? I mean, the key is to find the profitable pockets. We all know there was a moratorium in place in Sonoma County for a year, and when that was lifted, some of the restrictions about where you could set up a vacation rental were definitely tightened. For example, the new rule which prevents R1 zone properties from being operated as a vacation rental means it's a lot harder to find an eligible property in the Russian River area because there's just so many R1 zone properties. However, just because it's harder doesn't mean it's impossible. I mean, the flip side of this is if you do find a property that is eligible, the new rules means it will be harder for other vacation rentals to set up, and so helping increase the demand for the properties that are able to operate. I mean, the other opportunity is to have a clear proposition. I mean, like any other business, you need to have a clear target audience in mind. It's no longer enough to put up the Airbnb sign and expect bookings to take off. You know, who are you targeting? Are you targeting a specific demographic or a specific interest group? For example, I have a client who's setting up a vacation rental specifically for bachelorette weekends, or hen parties as we call them in the UK. I've got another client who provides a catered breakfast service each morning at a time to suit his guests, which is included in the price because he knows that his guests will be out wine tasting all day, so appreciate a prepared brunch. Depending on who you are targeting, will drive the type of experience you create, but you need to focus on the experience. It's not just enough to have a house in a great location. That being said, location is key. Location, location, location. As with any market, you need to go where the people are. If we look across Sonoma County, it's important to focus on being close to the places that attract the most people. If we look at the visitor numbers to places like Sonoma and Healdsburg, it's no surprise that vacation rentals near to these main tourist centres do really well. But we can also find other areas that attract visitors but don't necessarily have as many vacation rentals. For example, Occidental is a big centre for the biking community and is getting increasingly popular with people from the Bay Area, and yet there's only 41 vacation rentals there. I mean, that all being said, it's definitely an interesting looking market right now. So what about the long-term prospects? Well, the global vacation rental market size was estimated at $83 billion in 2022 and is expected to grow at a compound annual growth rate of 4.7% from 2023 to 2030. The rising expenditure on travel, vacations and accommodation among millennials is what's driving this market growth. Given there are over 200 million global tourists who are millennials and they spend around $180 billion on travel every year, it's no wonder the market is expected to continue to grow. And the other big change is changing working practices. One of the big dynamics that has changed over the past few years are employees being able to work from home. None more so than people in the Bay Area in the tech sector. I know a couple of people who they work in tech, work at Netflix actually in particular, who can work from anywhere. So one of them actually rotates around vacation rentals a month or two at a time and travels like all over the world. Aside from those employees, there are a lot of people in the Bay Area who only need to go to the office, a couple of days a week or every other week. So that in its own right gives people the ability to travel further when they go away for a long weekend or take more trips. This has also led to an increase in what I'd call the mid-term rental market, where people choose to rent somewhere for 30 days or 45 days at a time, which can be helpful in the quieter vacation rental months. I mean, the other interesting development is the segmentation of services. Airbnb was the original generic platform, but now there are so many niche platforms targeting different demographics and different interest groups. For example, there's a site called Go Lightly, which is an Airbnb style platform set up by women for women. There are also numerous other sites targeting people who want to stay in quirky homes or in tree houses or in tiny houses. I mean, the list goes on. There'll always be opportunities for the Instagram-worthy homes that people want to go and stay at for a long weekend. And there are definitely cities which have been hard hit over the past year, don't get me wrong, with incomes falling 20% or even as much as 40% in places like Austin, but these markets are definitely outliers. If you're in Sonoma County, you will likely have seen incomes fall by 10% or 15%, which is painful. But you need to be able to ride out the economic lows in the same way you exploit the highs when the highs are there. So if you are looking at setting up a vacation rental, especially in this interest rate environment, you need to have a tight operating cost model. But importantly, have a unique point of difference and be really focused on the value proposition that you're creating for your guests. I mean, more than ever, you need to find a vacation rental property that will perform in the top 10 percentile of properties. If you do that, you'll make a healthy profit in the bad times as well as the good. I get calls all the time from people looking to buy or sell a vacation rental in Sonoma County. So reach out to me if you are looking at investing in a vacation rental in Sonoma County or would like to know more information about how to find a top performing rental. My number's in the description below. If you enjoyed this video, I'm sure you'll love the next one on Screen Right. Until the next video, go well.